Hey America, it is time to grab your tea. I've got housing updates for you going into 2025. As some of you may know, I track 928 markets across the United States, and here's what we've got this month. So, out of all the sellers markets, we lost another 22% that are dropping out of the seller's market bucket and moving into balanced market or buyer's markets. And as you can see, the majority of them move straight into buyer's markets, which is a little concerning because usually they kind of slow down, go into balance, and then slowly go into buyer's markets. But for the past 2 months, it's been a solid 20% moving straight into buyer's markets. So that is something to be concerned about. And what does that mean for you if you're thinking about selling your house in one of these red markets? Well, your home will probably sit on the market a little bit longer. The buyers are now in control here, and they're probably going to start putting in offers less than what you're asking for, or you may not get an offer and you'll have to cut your price. So let's talk about these green sellers markets that you see up here. So that's going to be markets mostly from the Northeast over to the Midwest. We're talking anything from Massachusetts, Connecticut, upstate New York. Buffalo is actually the #1 hottest market right now, and that's going into the Midwest over to Wisconsin, some parts of Illinois. There are also some hot markets on the West Coast, and we're talking areas like Las Vegas or LA, Southern California, even parts of North Dakota, I believe, are still hot markets. And then we have 299 markets that are balanced. So what does that mean? To me, a balanced market is what I call a stalemate market. It's where sellers aren't really coming to the market with new inventory and buyers aren't really interested in what's on the market today. While some sales are happening, it just means that these markets have slowed down considerably and they're not yet considered a buyer's market. These markets are peppered around the United States, where in some markets, it's going to be right next to either a really hot market or a really hot buyer's market. For example, on the west coast of Florida, it's pretty much a buyer's market there after all the hurricanes and the issues that they've been having. But Tallahassee and Orlando are technically considered balanced markets right now. So of the 928 markets I track, 47% of them, that's right, almost 50% of the markets in the United States that I track are now considered a buyer's market. The top markets in the biggest cities that are buyer's markets right now are going to be Miami, Tampa, Florida, Cape Coral, Florida, Austin, Texas, and Jacksonville, Florida. I think we're seeing a trend with Florida for sure. And then if we're talking mid-level markets, you can see a lot of the Sun Belt is definitely in a strong buyer's market stronghold going, across the United States. So very interesting what's happening right now with the housing market, with the Northeast holding steady with the sellers markets and the Southeast really holding steady with the buyers markets, and peppered throughout the rest of the country is a lot of balanced markets. There's still a lot of buyers markets in the West as well. And so you may hear some conflicting things in the media because these sellers markets are still so incredibly strong that you may hear, oh, home prices went up another 3% in 2024. But you're going to be smart enough because you now know that almost half the United States is actually going into a buyer's market, and we know that prices will be coming down. And again, that's all dependent on what interest rates do. Interest rates have remained high, pretty close to 7%, and we're going into the winter, the dead zone of where it's just going to continue to be slow until the spring of 2025 will tell a different story. So what does that mean for you as a home buyer? So some markets are being targeted by investors. There's a fresh report from PricewaterhouseCoopers that the DFW metro area is being targeted by investors. So does that mean that the location has a rock solid economy and prices have come down enough to where investors are starting to see that as opportunity? The report has highlighted that the total employment in the DFW area has jumped over 11% since February 2020. So something to keep an eye on if you're in the Texas area. And you may be wondering why interest rates remain high, even though you have heard that the Feds have cut interest rates 2 months in a row. And it's because mortgage rates are actually more closely linked to the bond markets, not the Fed interest rates. In particularly, the yields really follow the US Treasury bonds. So when the yield on the US Treasury goes up, usually so do interest rates. So that's something you need to keep an eye on and not what the Fed is doing. So recently, the yield on the 10-year US Treasury bond has been increasing, and it's influenced by economic data and inflation reports. So as of November 14th, the 10-year yield was at 4.3%, up from 3.6 in mid-September. So that is why we saw mortgage interest rates increase. So what is the mortgage rate outlook? Well, analysts still are expecting mortgage rates to remain high as long as the economy stays in this strong position and inflation is still on the verge of increasing. And if inflation does stabilize or pull back, or if the economic growth stabilizes or pulls back, then the bond yield will reduce, in turn reducing some of the mortgage rates as well. So to wrap this up, as you can see, the market is so drastically different depending on where you are in the United States. Real estate is local. And so if you are planning on buying or selling a house going into 2025, definitely consult with a real estate agent so they can tell you about the macro, micro trends in your own market.